Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. On the daily time frame, Bitcoin continues to form a downward trend. The trend structure is identified as bearish, and the CHOCH line is currently at level of 97,900 USD. Only above this level can be considered the downward trend to have ended. Recall that the last sell signal was generated within the bearish FVG. Thus, traders had an excellent opportunity to seize nearly the entire last downward movement. The current target for the decline remains the level of 57,500 USD. It's a 61% by Fibonacci. Given no signs of a trend reversal to the upside, we believe the decline will continue. On the daily time frame, the nearest point of interest area for new sell trades is 79,500 USD and 81,100 USD. On the 4-hour time frame, the price remains in a flat range. But has a good chance of concluding it today. The CHOCH line is at 90,560 USD, and only above that level can we speak of a trend shift to bullish. There is also another CHOCH line, which serves as support for the upper correction that began on February 6. Breaking this line will indicate the end of the correction. We have observed two deviations, the lower channel boundary and two at the upper boundary. However, the last deviation and order block may turn out to be false. The bears can only be aided in this situation by removing liquidity from the last two highs. In this case, a third deviation will be formed. Ethereum has broken out of the sideways range. This suggests that while tensions in the Middle East remain high and many financial and commodity markets are experiencing strong volatility, the crypto market continues to show little reaction. On the 4-hour time frame, a new deviation above the upper boundary was formed on March 13. The price quickly reversed and printed a bearish engulfing pattern, meaning these two candles together could be treated as the bearish order block. Recall that an order block typically forms when liquidity above a previous high has taken, following by a sharp move in the opposite direction. However, today this order block has already been broken, which suggests that the upward correction may continue toward the nearest bearish FVG on daily time frame. There is also a small chance of a third deviation forming, followed by a return back into the previous range. On the daily time frame, Ethereum continues to form a downtrend. At the moment, there are 3 bearish patterns on the daily chart, all of them FVG. which could serve as a potential areas for new short positions in the future. However, for that to happen, Ethereum needs to show at least some upward correction. Instead, it has been trading sideways for about 5 weeks. The nearest FVG is located in the 2480-2630 zone, and this area is of particular interest for traders. The CHOCH level is currently at 33.95 USD, which also marks the last lower low. As long as the price remains below this level, the downtrend remains intact. If a correction does begin, it could turn into a long, slow, and exhaustion move. On the 4-hour time frame, it is also clear that the price has been trading inside a sideways range for more than a month. And the range itself is quite narrow. Earlier this week, another deviation above the upper boundary was formed, together with a bearish order block. This already provided grounds for short positions, and the reaction to the order block may offer another opportunity to enter the market. The targets are quite obvious, 50% and 100% of the range, as well as the area below the trend line. Bitcoin has formed very similar structures and patterns, so both major cryptocurrencies could start a new leg lower in the coming days. That's all for today. See you online soon, and good luck.